All right. So we are live. Hopefully, the audio is gonna be working right on this. We have it set up. We've been working with some new technology and a little bit of technology challenges in doing this. We're gonna go ahead and give this a minute before we get rolling into today's kinda data-packed, um, episode where we're gonna kinda look at what everything's happening and, trying to pull up some stuff for you guys right now on a computer screen that we will then switch to here in just a few moments. Okay, this is gonna be we're gonna cover a lot of market data. Let me try to send this and talk about what is happening. Obviously, a lot of the data that we look at is, what we call lagging indicators. Lagging indicators are what happened, right? So it's previous. Whenever we deal with something that's happened previous, the events that have happened recently will have could be a leading indicator for data to change later. So we always have to look at leading indicators and lagging indicators. Obviously, world news will be a factor in this. So let's go ahead and we're going to get started here. Okay, so I don't even really know how to say this. I can just look directly at you for this part. Obviously, in this past week, we've had some seriously massive historical events take place. It's affectionately being referred to as the shot heard around the world. The attempted assassination of former President Trump, who is a candidate for the 2024 office, took place. Blood was drawn. These type of world events, when they take place, do have an effect on markets. So, based on that, first of all, I'd like to, just offer prayers and support, because regardless of what side of the aisle you're on, I don't think political violence is the way to go. Um, I believe that we should pray for our leaders, whether it's the leader in office that we wanted or the one we don't. So in both cases, I pray for candidates as well as for the sitting president of the United States across the board. That being said, moving to how this affects market data. First thing that is a possible effect of something like this in a world event would be on how it could affect interest rates, because when you have something that is destabilizing, confidence from investors in the marketplace affect how they invest. So I haven't looked at the S&P 500. I've not looked at the market today to see what's happening. Typically, when the stock market does not as good, money floods into the bond market. But if there's no confidence in the future, then money will leave the bond market too. And if that's the case, then if we don't have confidence in the bond market, what happens is interest rates will rise. So that's one of the net effects, like, just from a national perspective that you can see with global world events like this. The other things are how that trickles down. If the economy starts to rifle because investor confidence is low, therefore businesses do less business, and there's more layoffs and unemployment increases, then you have instability that kind of it becomes a domino effect. So those caveats are gonna be something we're gonna be watching, in this next quarter as we've entered into the 3rd quarter of the year. We're gonna wanna look at that data and see what it looks like as a whole, because it's gonna have an effect, and that effect can be dramatic. Okay, so that being said, now let's go ahead and kinda crank into what we're looking at here from a data standpoint to see what's just happening. We're gonna do our basic rundown like we do in Cherokee County. Then we have, some Trend Talk slides that will give us some additional data that we can kinda look at. So I'm gonna go ahead and switch to my screen. So we like to do this microcosm, that we do all the time, by looking at the data here on the screen. And so we like to come in here and go, "Okay, what happened in the last week?" So we just do 0 to 7 days. However, I should probably do that correctly. Alright, so in the last 0 to 7 days, and then we wanna put the county in that we're looking at. We're trying to do just what's happened in Cherokee County. So in the last 7 days, we see that there are 2 properties that were put active that have not yet gone under contract. So let's just see if there was any that also went under contract that went live in the last 7 days. I gotta get that to be like that. Okay, so that's 167. So it's possible in the last 7 days we've had, them go into a pending status. We've got that have changed into a pending status is 7, that went active under contract, which probably would be a more realistic indicator. So this is very realistic. I don't think the pendings are actually all that big. You're at 47 still, 184. You're basically looking at in Cherokee County, there we go. That's a little bit better of a piece of data. In the last 7 days, we have 130 listings that have gone live. Let's see how many have closed. In the last 7 days, closings have been 36. So that's a lot more properties coming on the market than what are going off the market. Alright, so active is 130, closed was 36. Obviously, that's the extreme, so let's look at pendings. 17 active under contracts and pendings combined is 54. So no longer for sale if you put these 3 together because 'cause they're under contract, assuming they close, and the closed, you've got 90 out of the 130, and let's see what expired and withdrawn has been in the last 7 days as well. 7 and 7. Alright, so 135. So if you take everything that went on the market in the last 7 days, all 130, and you say, "Well, which one let's figure the ones that expired out, that didn't sell, the ones that were withdrawn, let's couple them in, let's couple all the ones that closed, which was only a handful, and then let's couple in everything that went under contract because effectively it's no longer available at this moment." That being the case, you've got 135 versus 130. That's fairly stable as far as the market goes. If you've got 130 new ones coming on the market and then 135 that have been removed in the same week that are either not for sale, closed, withdrawn, or completely off the market, somewhere in one of those categories, that's a good piece of data. Let's go back and look at it from a 30-day standpoint because obviously 1 week microcosms are just to see patterns. So let's go back and check on this from a 30-day standpoint. So let's change all these 30 days. We can see a better pattern, right? Because a lot of closings hit towards the end of the month, which is probably why we didn't have a whole lot going. Alright, so all available off the market in Cherokee County, which is gonna be all of these categories combined, you got 678. Alright, so let's remove those, and let's see what we brought on the market in the last 30 days, which we brought 344 on the market, and we've lost 678. That's a lot. Now let's just see about the ones actually selling, or at least getting contracts on them and then going to closing. Accounts for a majority of that 678. I'm not sure if you can actually see that. You can. Alright. So 558 of the 678, were got contracts or closed. That removes the withdrawn and expired, which in the last 30 days, we're seeing about 120, which is about, I don't know, that's a sixth of the market. You're losing about sixth of the market is not selling. So that'll give you that kinda data there, to show what's looking at as failed. One of the things that I wanted to mention as we look at some of this, data is going to be some of these slides. Alright, so this is called the hot or not slide. So this is, what we get on a monthly basis. So this was June of 2024 for last month. And the reason I like this particular slide is it shows all the counties. If you just take the number in general, you're gonna see 13,361 total actives, 6,000 pendings, and the pending ratio is 32%, which you can see the change year over year has dropped by 13.9% here and 10% here, which doesn't look as good. Now come up to Cherokee and let's look at this. We have 929 active. This was June. Remember, I just showed you some of July's data, real-time data. 11.1, which is up 42% in the amount of active. So this says we got 42% more stuff on the market. The more stuff that comes on the market, eventually, we're going to have, more inventory that's gonna cause prices to fall. So the total pendings are 549, which is up by 1.3% month-over-month, but year-over-year, it's down 7%, and then the pending ratio is higher than it is here, when you look at that kind of data. So as you kinda go into the sellers, buyers, and balanced market, type looking at you're looking at months of supply. All of these seem to be in the red. Speed to the market, right? 342, Cherokee's down by 17 percent month-over-month. Year, it's almost even, 1.4% is not a big difference. All right, the month, supply is up to 2.7. That's up 35% month-over-month, 42%. So that is a 42% increase. That's a significant increase, on inventory. Now, but we have to speak about this in relative terms. 2.7 months. The balanced market, unless they're somehow gonna change what that data looks like, is 6 months worth of inventory. That's when you see massive price softening. Let's just say 3 months is the new 6 months. Not sure what would make that happen. Generally, the 6-month window is the right amount of window for a balanced market, but even if so, we're still firmly into a seller's market, is what I see here. Really, you want that 6. Now, if you look here on this data, down at this particular month, South Fulton is at 5.7 months. So South Fulton is tipping its way into, that balanced market, possibly gonna end up towards a buyer's market. The days on market, so that's the month supplies. Here's your days on market data. Still firmly under 1 month. Here's the one that's the only one with 6 months worth of inventory is sitting at 39 days. We in Cherokee are still at 19. So this is really strong data as you look at this stuff. Cherokee over here, closed listings, median price was 505,000, so we're up from the 574 to 505. That's painful, which is up 8% year over year and 4.3%. So if you were to take that just on its face value, that's an increase of 8% appreciation. So when everybody said the interest rates went up, properties would stop appreciating. That data says that's not true. Um, and so eventually it gets to be too much, but what we're looking for is going to be that supply and demand. Now let's look at the pendings. The pendings, that was the close. The pendings are actually at a higher valuation, and the actives are even higher than that. So that's, you know, shows new construction and some of the other stuff. 100% Club sold at or above its asking price. In Cherokee, 43.6% of all listings sold above their asking price, and that is down by 11.2%. So it does show a softening, and the median days for those properties are gonna be 8 days on market, which is actually the average if you take all the counties into effect. So, we're looking at some interesting data there. Come over to this one and see what we got here. So these are yearly trends. Now here is a different view of the data overall. This kind of view of the data that we're about to look at really kinda covers, um, a bigger look. Like, so this is gonna be from June of 2023 to June of 2024. It started feeling soft in June of 2023. So the amount of active listings went up significantly if you just look at that month versus this month. We're up by 55%. The amount of pending actually is down. So if you're up 55% and you're down in pending, that means more market stuff is sitting on the market. The pending ratio fell from 45 to 33. Numbers of solds are pretty close. They're down by 15%. And, the failed listing percentage is up by a solid 10%. Your median sales price was at 470, now it's at 508. A median original list. The sales price is 460 and landed at 499, just under the 500 mark. Still sitting firmly under a month, but up in time. So you're getting some of this change data, the 6-month trend. Here's the inventory. You can see how it climbed. Pending inventory also climbed a little bit lower here in June than it was in May. We did feel this in May. We had a really busy May. The pending ratio actually went up and then came back down. So we're in the 40s here, starting at 36, now we're below it at 33. The solds, though, I mean, as it would in the summer, the data came up, but now we're starting to dip back down into what we did in closer to, failed listing percentages, kind of across the board. They start to do better here, and then they climb up a little bit. But values, y everybody wants to argue about values. Will values increase? Will they decrease? Well, let's just look at the data. We've been talking about when price interest rates shot up last year, um, and everything started to feel slow. What you ended up with looking at is the median original list price. Let's go with sales price. As came in January of 2024 for Metro Atlanta as a whole, um, so it's all 8 counties, was 425,000. Currently, it's at 499,000 this year alone. That's from January to June, right? The days on market actually were 40 on average, median, and now they're 19. So what do I interpret this as? Some of the data says that inventory is growing. Some of it says we still don't have enough inventory to move the interest rates. Remember, as interest rates are higher, when they're sitting at 7 and a quarter to 7.5%, I've even seen some at 8. But right now they're closing at 6.78. 5, 6.785, maybe some at 6.5. Those type of interest rates will cause people that have been on the fence to go ahead and make a move. So it is having a movement here, and then 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 one here and here. So it's doing a lot of different things that's causing inventory to climb, but not enough to crush prices. Across the board, we're seeing appreciation. So what happens when the Fed lowers the interest rate, and will they? That's gonna be the next segment we're gonna talk about here. So, what we've seen is the Fed has said that they, were gonna lower interest rates 3 times this year as we were coming out of the end of 2023. That is not what happened. Their economic data still showed some solid market information, so they weren't, um people weren't losing their jobs enough, I guess, is the way to look at that. There was enough good jobs out there that they decided that they were to keep interest rates higher to kind of keep continually slow the economy down. Well, now they've received enough good data that we believe at least what they've said most recently, and again, we've reported on this before, on them saying that they were gonna do 3 rate cuts, that, we started believing that there was gonna be 0 rate cuts this year. The most recent data that came out indicated that there's possibly one coming in September. And so the market's gonna start to react to that type of information with a little bit of confidence. Obviously, this is barring the shot heard around the world. Those type of, world events, like what happened, this past, weekend at the rally in Pennsylvania, depending on how the market feels about that and wants to respond to it, it may be a blip in the radar, it may be business as usual. I was gonna say, my opinion is if this were, the '50s, '60s, or maybe even the '70s, it would have a bigger impact. In the world we live in today, where there's a lot of desensitization to violence and all kinds of other stuff, that it may just be a blip in the market. Anyway, we're gonna watch that and see what happens. By next week, when we do our broadcast, we're actually gonna do our investor seminar to look at what investing looks like. We're also gonna have the data for all of, second quarter, so it won't just be a month-over-month, but the complete data set, for second quarter to see how it did. In our experience, it was a little bit slower than normal. May was, more active than June was, which was weird. Usually you get May and then June, but it was kinda like May and then June. And now we're coming into July and August is kind of stacking up. The market is definitely not running on its linear, path anymore. It's kind of moving around, and I expect it to continue to do that. I would say that 2024 is gonna be a roller coaster ride. The rest of it's going to be very volatile. The market is gonna probably still respond with overall appreciation. I think if rates come down, prices will increase dramatically. If they fall into the 5s and you can get into a 5.5 or even a 5 flat type of a rate for, owner-occupant properties, then I think those that have been sitting on the market waiting for the right thing to happen are gonna jump at it because 'cause they're afraid it's gonna go back up again. So we have a lot of ground to make up to see where we're gonna end. Your number one indicator to see if there's a market crash coming is going to be that inventory. Watch days on market and watch the month supply of inventory. Those 2 pieces of data will tell you as we climb to 5 and 6, that's your window. That's where we don't know. It doesn't mean it's gonna go to 12 like it did in 2008. One of the things I had predicted early on was the next big, correction in real estate actually would be on the commercial front. I don't follow a whole lot of commercial, but I believe that I've seen some reports that that's what people are saying is coming. Office space and things like that will be what is challenged more than residential. So let's watch and see what happens. But that's going to be it for today's broadcast. We just, again, it's a lot of boring data stuff. I do these because I just want to go on record of looking at what the data is like, sharing it with you, the public, because we sit behind a desk and watch this data. And when somebody comes to your house to look at it and to try to help you give a valuation, I think they owe it to you to have looked at the economics to see how that's going to affect what you price today and how quickly your property sells. Thank you so much for being here. If you made it to the end of the broadcast, please consider subscribing to the channel, giving us a like, or even a comment. I greatly appreciate you guys and your watching of the video. So if you have any questions, please feel free to reach out. Our number is 770, and I'll put it right here on the screen. That's my cell phone. If you want to call me directly, you can, and we can talk about that. So appreciate you guys, and we will talk soon.